Guys, did you know withholding tax could be the key to avoiding a surprise bill from the IRS? Did you ever thought, how does this silent deduction shape your tax refund or leave you owing more than you expect? Have you ever looked at your paycheck and wondered why the amount seemed a bit lower than you expected? You're not alone. Many Americans experience this same feeling, completely unaware of a silent but powerful force at work, withholding tax. This mysterious deduction, often misunderstood, plays a crucial role in our financial system. Guys, in this video to uncover how withholding tax works and how you can avoid unexpected surprises during tax season, in this simple guide, we'll demystify withholding tax, breaking it down into easily digestible pieces. We'll explain what it is, who pays it, and why it matters to you. By the end, you'll be equipped with the knowledge to confidently navigate this aspect of your finances. So, let's dive in. In simple words, withholding tax is like a prepayment plan for your income taxes. Instead of paying a lump sum at the end of the year, a portion of your income is deducted from each paycheck and sent directly to the government. Think of it as setting aside money throughout the year to cover your tax obligations, ensuring you don't get hit with a hefty bill come tax season. This system benefits both taxpayers and the government. For individuals, it makes paying taxes more manageable, spreading the cost throughout the year. For the government, it ensures a steady stream of revenue and reduces the risk of widespread tax evasion. Withholding tax applies to various types of income, including salaries, wages, bonuses, and even gambling winnings. The amount withheld depends on factors like your income level, filing status, and the number of dependents you claim. Withholding is calculated based on the information you provide on your W-4 form. Increasing your withholding can result in a refund from the IRS at the end of the year. Now that you understand the basics, let's delve into who's responsible for this crucial financial maneuver. If you're employed, your employer is responsible for withholding taxes from your paycheck. They act as intermediaries, collecting the designated amount and remitting it to the government on your behalf. This process is typically automated through payroll systems, making it seamless for both employers and employees. While it may seem like your employer is solely responsible, ultimately, you are the one paying the tax. The money withheld from your paycheck represents your income tax liability, which you're prepaying throughout the year. This is where Form W-4 comes into play. When you start a new job, you fill out Form W-4 to inform your employer of your tax situation. This helps determine the correct amount of tax to withhold from your paycheck. This system promotes financial stability for both taxpayers and the government, enabling the funding of essential public services. Now let's unravel the mystery of calculating your withholding tax. Calculating the unknown. Tools to decode the puzzle. Calculating your withholding tax doesn't require a degree in rocket science. The IRS provides a handy online tool called the Tax Withholding Estimator to help you estimate your tax liability and adjust your withholding if needed. This user-friendly tool guides you through a series of questions about your income, filing status, dependents, and deductions. Go to irs.gov website and search for Tax Withholding Estimator in search bar. Based on your input, the estimator calculates your projected tax liability and recommends the appropriate withholding amount for your situation. You can access the Tax Withholding Estimator on the IRS website and use it anytime to ensure your withholding is on track. It's advisable to review your withholding periodically, especially after major life events like marriage, childbirth, or a significant change in income. To increase your withholding and ensure a safe refund from the IRS, you can follow these steps. Adjust your Form W-4. Request a new Form W-4 from your employer or download it from the IRS website. Use the IRS Tax Withholding Estimator to determine how much additional withholding you need. Add extra withholding. On the W-4, under Step 4C, specify an additional amount you'd like withheld from each paycheck. This can help cover any potential shortfall in taxes. Ensure that your filing status, for example, single, married filing jointly, and dependents claimed on the W-4, align with your current financial situation. If you have multiple jobs, side gigs, or changes in income, ensure that withholding is sufficient to cover your total tax liability. By taking these steps, you can reduce the risk of owing taxes at the end of the year while ensuring a potential refund. The importance of withholding, preventing future tax headaches. Paying withholding tax correctly is crucial for several reasons. First and foremost, it ensures you're meeting your tax obligations and avoiding potential penalties. Failing to withhold enough taxes can result in an unexpected tax bill, or even penalties for underpayment. Secondly, accurate withholding contributes to a smoother tax filing experience. By prepaying your taxes throughout the year, you'll likely receive a smaller tax refund or owe less when you file your return. Lastly, withholding tax plays a vital role in funding essential government programs and services, including healthcare, education, and infrastructure. By fulfilling our tax obligations, we contribute to the well-being of our communities and the nation as a whole. In conclusion, understanding withholding tax is essential for every taxpayer. By grasping the basics, utilizing available resources, and ensuring accurate withholding, we can navigate our tax responsibilities with confidence and contribute to a stronger financial future for ourselves and our nation. Thank you for watching. We hope this video helped you understand withholding tax and how to manage it effectively. If you found this information useful, please share it with others who might benefit. And don't forget to subscribe to our channel for more tax tips and insights. Feel free to leave your questions or thoughts in the comments below. See you in the next video.